Well, good morning. I see that I screwed up my timestamps yesterday. I did them out of sequence. Good morning. It is the 15th of August, 2024, a Thursday. There are a number of reports out this morning at 7:30, and it's also, unfortunately for me, the first day of school. So I'm taking my daughter into school, which coincidentally is 7:30. Pretty disappointing, but we've got retail sales, initial jobless claims, and the Philli Fed all at 7:30. Pretty substantial group of numbers there. I'm not going to try the strategy that I'm thinking about on this group of numbers, and that I won't be here. So what can you say? The overnight here has been basically consolidating. It'll chop up into this numbers area. Right now we are just a couple of ticks, a handle or so above previous RTH high, which would, depending on where these numbers shake out, we could be opening again higher out of range. Remember that the statistics based on the potential open of the upcoming RTH session as it relates to the close of the previous RTH session, higher or lower, and then whether that open of the upcoming RTH is within range of the previous session or not. So we can have higher in range, higher out of range, lower in range, lower out of range. That can be the opening types. The micro composite here. Because we had this gap up that didn't close, and then yesterday's trade was on top of the day before, I've drawn a new volume profile here around this. So my new micro composite is comprised of these 2 days, and the micro composite VPOC for me now is 54.58.5. All right. And now I got to go get about the task of getting things organized for the school run. So I'll pick all this up when I get back, unfortunately. I would really like to be trying that strategy on this number, but what to do? All right. I'll pick it all up and start the sequence fresh on my return ahead of the open. As usual, I just wanted to make sure that the stream was on. And recording, because I don't take any trades off stream. right, so we got some things in motion here. What do we got? Yeah, irritating. So yeah, first day of school, up early. Everybody's walking around bumping into each other here. And Mom, who's usually up at the crack of dawn, is pretty sleepy, so she's got the cats fed and back to bed. So thank goodness it's Thursday. I don't know why the hell school starts on a Thursday. Go figure that out. But that's the way it seems to be here for this. Here in the fine state of Texas, Houston to be exact. As soon as she graduates, we'll be moving back out. I've never lived in Texas before in my life. Grew up on the exact other side of the country at the north, exactly north of here on the Canadian border. I grew up in ranch in Montana. So interesting here. Big, flat, hot. Fell in through of electric grid problems, and but the people are, one-on-one are real nice. No question about that. Never had any issues, and real helpful at like school, getting our daughter started. We just moved back here we moved here from Asia, got her right into school, and a lot of help. So, we'll say that. If the grid, was stable, and the heat is a lot too. So for me and for our family, Houston's got multiple whammies, because they lose power when it's hot. They lose power when it's cold. And Houston's right pretty much on the coast, so hurricanes. They got it all breaking their way, these poor suckers. But but there's a lot of people here, and a lot of them are real avidly proud of being from Texas or Texans or whatever. So there's quite a state pride that I've not really experienced any other places. That's part of the reason for the electric problem. They refuse to connect the Texas grid to the rest of the United States lower 48 grid. Go figure. So when their grid falls over, they can't just, people can't get power in here, even if they wanted to. Other states, it's not sure the logic there, other than just this real sense of Texas independence or something like that, I guess. I don't know. Seems pretty, seems that after billions of dollars, people in Texas lose billions of dollars when it let that big cold snap when everything froze and the power grid fell over. And so all the houses froze. Because the water table is high here, all the houses are built slab on grade, basically. So the water pipes and all the, furnace and water heater and everything's in the attics of the houses because there's no basements. So when it's cold, when that, power went out and it got so cold, all the pipes froze. And then when it warmed up, all the pipes thawed and all the ceilings came down and billions of dollars of damage to Texas people's homes because they weren't connected to the wider grid, which would have just stepped right in and provided power and there would have been no problems. But, c'est la vie. We'll be moving in a year. As soon as this is our daughter's senior year, so as soon as she graduates, I came back here partly for work and because I didn't think that our family would really I didn't think that they would adjust to a colder climate. Colorado, for example, where my son lives and whatnot. And that was a big mistake on my part. I wish we'd have started there. I wish we'd have moved straight there rather than here first. Now we have the giant problem of moving and all that. But once our daughter got into school, we were going to relocate after the first year, and she was quite adamant that that's not what she wanted it was to do. So we didn't even think about it. We just said, sure, no problem. We'll stay here for you. So that's what we've done. And like I said, the people are real nice and, there's nice shopping and things like that. So one thing that's hard for me to get used to here is it's flat as a damn board. The highest elevation now this is Houston. I guess there is a hill country in Texas somewhere, but the highest elevation for miles around here is the flyover on the freeway, which is pretty, coming from where I came from, it's pretty amazing. Our ranch was literally on the Continental Divide. We had Continental Divide markers along the mountain. Our ranch was a mountain basically in Montana. And, we were right on we had the Continental Divide markers right along the top of our summer pasture. So, completely foreign to me. And the Rockies and Jackson Hole and the Tetons and all that stuff was just all in my backyard. So I can't say that Texas is beautiful, that part of that I've seen, because I've seen nothing but flat and hot. And this is a big city too. It's like 4 or 5 million people, I think, or more. And real spread out. You can drive a long way to get to places here. Like 15, 20 miles. And you're still just going someplace in Houston. So it's been a real interesting experience. But our daughter seems to be getting a good education, and that's why we're here. Okay, 7:12. I really wish I could get this rig set up for that trial I was going to have. But two things this morning. I don't think I'll be here for 7:30 for my daughter. I don't think she'll be. It's too dicey to be traffic or something. I'm not back for the 7:30 report, so I'm just going to leave the stream up and record it. And I'll do the regular pre-market analysis and discussion about the risk neutral profile, 2-lot package, and trading as a business and all those things, which I do every day. It's kind of my sermon. So should be well through the shower now. I'm going to bust off here and then get ready to drive over to school. Well, 6 minutes late. Thank goodness I didn't do that. However, it would have worked to a lesser degree, but not enough range, which is what I had calculated from my original planning here over these last few days. So we'll let this cook for a little while longer here, and then I will. Just got back from dropping her daughter, first day of her senior year of high school. So monumentous event here today. So in this case, just reviewing where I was here, the strategy, I'm glad that my analysis is the strategy paid off, that there wasn't typically enough range on any of those individual reports or collectively to have done it. However, because essentially then it was, say it fired at 97, right? So that's 20 points, 07. Okay, so you're in right here. The problem is then, very likely, depending on where the entry actually was in this fast move, it's very, very probable to have been stopped out on the daily drawdown. Though the trade is, essentially, if you were playing this market just normally, quite a nice move, right? So it's 30 points so far to the upside. But I'll get into all that later. I'll once I've actually tested this and seen that it works and whatever else, rather than blow up a bunch of typical internet smoke. After I've tested it and thoroughly gone through everything, I will make a proper video of the testing, the data that I used to test, the testing that I did, and the setup so that it's shared and maybe it can help someone. But this is really a nice pop that we're gotten here. And now, if you manually traded this and you watch this, little business right here and took this additional buying as a trigger, you're doing really well. That's 25 points. I scrunch this down, which I typically don't trade this way, but in order to see the move, right? So let's get back to the business at hand. Where the hell are we here? So let's get back to and let's see, it's 54 past the hour and it's 51. Minus 20 is about 34. So I'm going to put this I'll leave these reports and numbers at about 30. Say that came out at about, whoops, wrong mount keyboard. Pitch. I wonder if I'll ever get that figured out. At about 30, make that 20, 29 or something like that. And let's make this 25. So 55 minus 20, 35. Okay. Make this say 25 minutes. And when I talked about the report at about, I don't know, 02 or 3. 02, we'll call it that. Now, I think I will start fresh here at 55. Let's call it 56 in. This is that gosh darn timestamp thing. And if I get out of whack with it during the day, it proves challenging for me, which is, So let's get to the pre-market. We've obviously had a big pop-up on those multiple numbers, which I discussed: jobless claims, retail sales of Philli Fed. They all popped at 9:30. I'm sorry, 7:30. And we also have several we've got industrial production and business inventory, industrial production at 8:15. Business inventories at 9, the retail inventories at 9, and then Atlanta Fed and FOMC at 11, and then Hawker, FOMC member Hawker speaks at 12. So it's just magical day. All right, so that's where we are. And now let's look at the bigger picture over here. Okay. That right? Let me see something here. 75 minus 13, 62 years ago. Should have taken a picture of Pam on the first morning of. All right, now where the hell was I after that little session of stuff here? Okay, so let's get to the pre-market. I'll call it 1 hour in. There we go. Damn it. All right. So here we go. We've had the pre-market. We've had this report flash. It would have likely not worked for the new strategy that I'm thinking about, because one of the key elements is you have to, be aware of the daily drawdown, my limits there, my stop limit. And that can't be, that can be a factor. I figure that in with my testing. I can actually show you that here. There's a daily drawdown one where the strategy hit. I use a stop when I'm back testing on replay so that I can simulate the automatic drawdown in place on my rhythmic. But here it would be here it is working. So it fired here. There was no touch of the daily drawdown, which is, isn't in the regular trade. This stop would not be in place, but it would be. There's an automatic drawdown on a limit on rhythmic, and then to target. So $3,000 in 30 seconds, 1 minute. That's the plan. So that's where we are. We're gone 8 o'clock here. We have. We were just pretty much in the hold all night, and then bang, boom, crash. Here came the number. Quite a nice pop to the upside. I will start to input all of my statistics. The price levels are pushed from IRT to bookmap. They push to this column right here. I guess I could change the name from cloud nodes to something else. They push to this column. Then I manually input the statistics associated with each price level from the IRT, my IRT statistics study. And this higher out of range is just me typing in the opening type so that when I review these snaps or whatever else, I can just glance up there and see what the open was for that day. It means nothing other than just a note to myself. Then these are the high time frame columns where I manually enter levels off the micro composite. This is the high volume node, which are pushed automatically from bookmap, from IRT to bookmap. This is the full session volume profile. This is the RTH session volume profile, which will reset at 8:30. Cumulative delta for this, and the chart volume profile just plots what's on the graph. I'll get back to the rest of these levels in a minute. So we have then the opening type is determined by the relationship of the upcoming RTH open to the previous RTH close. So we are higher than the close, and then where that upcoming RTH open sits with relationship to the previous RTH range. So in this case, we are clearly higher out of range, and that's the opening type. And that's the statistics that I will use. They come from this tab, which is just how I have them set up. This is the opening statistic study. It looks backward at 2005 days. And there are just these 4 open types. That's all. You can't have a whole bunch of different variables and have something be statistically significant. So let's pretend and not pretend. The case today is going to be open higher out of range, because the open is going to be higher than the previous close, and it's going to be higher or outside of the previous day's range. So of these 2005 days, 521 of them opened higher out of range. Of these 521 days, each one of these number of days and percentage and resultant percentage is when the price action in the upcoming RTH revisited all these levels. And typically the most, usually one of the highest ones is the overnight point of control, which is 79.3. So I jump back over here. I happen to know that the overnight point of control is right there. So it is 79.3. And that's it. And if I could get myself, yeah, there we go. So that's the that's the overnight point of control. Then you do the same for the rest of them. The overnight mid, which is also usually a pretty substantial one, is 63.7. That goes right here. Boop. The overnight high is the next highest, that is 76.8. And that's living way up here now because of our old friend, the report. And that's how you do it. It's not magical or mysterious or anything. It's just math and statistics, which is the root of trading as a successful business. I'll cover that again in a little bit here. But, it's none of this stuff is magic or mysterious, or you don't have to wear a pointy hat with a, half moon star on it or moon on it or any of that wizard crap, right? So now that we know where these statistics come from and how they're input here, let's look at some of them, and I'll talk about the levels and where they come from and make it real clear. And now if I can find, here we go. Here's the value area high level, and here's the developing value area high level. That is, the difference is developing value area high is for the current session. In this case, the full session. Damn it, I didn't have that on. I'm sorry about that, the full session. I'll show these to you again. So the way you enter these, because I realized I had that screen off, you just open this, type in that value from the study, and there you go. All right. The difference between the developing value area high and the value area high is this is the current session, whether it's RTH or ETH, and the value area high and low represent the value area high or low from the previous RTH session, period. Not mysterious. Okay. Let's look at something else. The POCs. Here's the more muted yellow POC. It's for the full session. The bright yellow is for the RTH session, because I track a POC and a VWAP for each. This is the VWAP for the RTH, and this is the VWAP for the ETH. And you'll notice that they're also highlighted by the similar color over here in the volume profile. These are not mysterious levels or anything hard to calculate. And you can tell when a VPOC migration is going to happen, because the VPOC, by definition, is just the price at which the most number of contracts have traded in that session, period. So let's say here's 35.20. Okay, it's probably 35.20 half or quarter. So there's 35.20. The minute this price is 35.21, the VPOC will shift up there. That's all there is to it. It's just the price at which the most contracts have traded so far. Nothing more, nothing less. The IB high and the IB low are nothing but the high and the low of the first 1 hour of the RTH period. That's all. They migrate up, The low migrates down until 9:30. All my times are in Central Standard Time. So the market opens at 08:30. So 1 hour later, 09:30, they stop moving. Okay. And it's set. IB is an old market profile term for initial balance, but that's all it is. It's the high and low of the first 1 hour of the RTH period. I have no indicators on these charts or the book map. There is the VWAP, which I guess you could call an indicator because it is calculated. It's the volume weighted average price. The mid, that's better be pretty obvious to everybody. And I only plot the mid for the RTH session, not the ETH. Sorry about that. The VWAP for the ETH, mid, POC, IB high and low, period. Now, these price levels, which are pushed, and these are all pushed from IRT, don't forget. These price levels and these lines are actually two separate indicators, but they both fire on the same data pushed from IRT, which is instant. The reason I'm pointing that out is through the day, you'll notice that the line will move. Well, it won't. Bad example. Overnight mid probably won't. Neither will the close. Let's pick a value area. Okay, the value area might move. Developing value area might move, and then about 30 seconds later, the flag or this label will move. And the reason for that is that the cloud notes column here, which I input, the minimum refresh time that's available is 1 minute, set by myself. The person that made or people that made this indicator, which I actually bought through Bookmap because I like the line drawn at the same level as the flag. This indicator is programmatically set to refresh at about 30 seconds. So IRT is instant and it pushes the data. This one will update and it'll move. And then at about 30 seconds later, the flag will move. And that's completely understood, and that's the way it'll be. So it's not a mistake or an error or something like that. That's something to take on. So there's no levels. I mean, there's no indicators apart from VWAP, which is calculated. POC, price at which the most contracts have traded in the session. Mid, pretty obvious, the middle of the damn thing. IB high and low is the high and low of the first 1 hour of the session. Value area is computed at, in this case, it's really about 67.8% either side of the mean, but the median. But in this case, we use 70%. So that means that's the area of the profile where 70% of the volume has traded. Now, if we look over here. If we look over here at a volume profile chart, the way I have these set up is the grayer area, and this will change in a minute, but the grayer area is outside value. The value area is this bluer color of the profile. So that means that between these two lines, 70%, that's a bad example. Sorry about that. I can find a good one here for you. Well, you can see that there's a little... outside of value, and this area in here is 70%. In other words, 70% of the contracts in this whole session so far, well, this session's over with, so it's done, have traded within this area. That's all there is to that. And that's called the value area. These are all things that came from Market Profile, which is this charting system over here. But which have been now, volume profile is now quite a popular thing to have. So there we go. You can see that this gray area is outside of value and this blue area is within value. So 70% of the contracts so far in this overnight period have traded in this area. And it's pretty obvious where most of them were, and that this graph is just a report. You can see where these little consolidations happen here, where the volume peaks up. peaks up, and then a big consolidation up here at the top. Okay. 117 is the micro composite, which is just a chart of daily RTH bars, period. Then where price overlaps, like here, all these bars overlap each other to some degree, I draw a volume profile around it. And I've done so now on this new one. We gapped up yesterday. We didn't close the gap, or day before. We didn't close the gap. And now we've got yesterday up here. Day before is here, and the day before. So here we didn't close this gap. So I've drawn now a volume profile around this. And the result of drawing the volume profile is I get an MC, a micro composite volume profile, volume point of control, and I get a micro composite value area. And these green lines are high volume nodes, which, in other words, everywhere there's a high volume node on this profile, it plots a green line. Those green lines are pushed automatically to Bookmap. None of the rest of this is. I've manually entered the micro composite high and low, and I've manually entered the micro composite point of control, volume point of control. And those are entered again in this column, high time frame. So I think that pretty much has it up here, I think. One, about 17. Now, I've done those descriptions here. This is probably about, I'll just be right back. Oh, let's see. All right, now the next order of business is the trading setup, which I've already activated, but this is the 2-lot risk neutral trading package. The stop for both contracts is 12 ticks. The take profit or profit target number 1 for the first contract is 12 ticks positive. At this point, when this target is achieved, the trade is risk neutral, meaning that the worst you can possibly do is scratch. Unless you're a moron and you move your stop away from entry. And then the runner I have out at 48 ticks, 2 lots. You can trade as many of these 2-lot packages as you want to for your risk tolerance and your account size, et cetera. And then in order to activate that, you got to turn on the trade control panel over here and make sure that it's automatically got, and it will automatically be populated with your parameters. And the bracket stuff is off because it's controlled by the multi-brackets add in. Now, one thing about this control panel and about the trading, I trade with a dome only because I initiate trades with my keyboard and then I manipulate targets or trail to stop with my mouse. And if you have chart or both, meaning dome and chart, inside this area where you see the mouse turn into, sorry about that. I'm not showing you what I need to show you here. Oops, this is the 2-lot package activated by multi-brackets, 12-tick stop, 12-tick risk neutral scale, and then the runner. Sorry about that. Then you activate the control panel here, and I trade with the dome because I initiate with the keyboard and I manipulate with the mouse. If you have chart or both, inside of this faint line in this area right here, this is called the active data column. You can see how this is historical and this is price moving up and down. If you accidentally click in here somewhere, you've entered a trade, whether you wanted to or not. Now, I used to always have both because then I could grab a line or a target and move that level with my mouse over here. But if I accidentally did it here and wasn't right on the line, I would be in a trade I didn't plan on, which a couple of times taught me that lesson. So I do it this way. And this is because I initiate with the keyboard to start with. If you trade with your mouse, then this is just fine to do however you want, right? But this is what I do to eliminate an error, an execution error, getting into a trade that I didn't mean to. So in other words, I will initiate a trade with the keyboard, and then if I want to move my stop or my targets, I do it over here on the dome, and there's no possible way I can make a mistake in that regard. So that's how that works. So now we're set up to trade, and we've got our 2-lot package on. And one other aspect of my trading plan, well, there's a whole lot of them, but one of the key ones is that for an entry to be valid, after I have the setup and the criteria and the trigger, I have to have an unobstructed path to the first risk neutral scale. In other words, I can't have a big block of liquidity. I can't have levels in the way between my entry and the first scale. So that's a 3-point unobstructed or 12-tick unobstructed path to the first scale. That's a pretty big requirement. For example, yesterday, impossible for me to trade because it was like this. Okay, there you go. How are you going to get? Say you're down here at VWAP, and there is a VWAP to VPO. Forget which POC this is. Let's pretend we're at VWAP, and there's a structured trade that's VWAP to POC. Impossible for me to take that trade because there's not 3 points between these levels before you get to the POC. Now, that's a rule I may have to deal with because, it's kind of confusing or kind of disappointing to stand around all day long and watch the market move. But I would not be able to trade in here because there's not 3 points between them, for example. So there's that rule. Let me see how that worked with time. Okay. Okay, there's that. Now I need to make the TLab post, which I do every day at 8:20. I'll talk about who the TLab is here as soon as I do this post, which is that one right there. And I can't think and talk and type at the same time, so sorry about that. That's my goal here is not to be a influencer, but this stream is my virtual journal. And that's it. I mean, I hear what I was thinking by my narration, and I see what I was thinking by the video. It is my virtual journal. That's the purpose of this stream. I stream it to YouTube so that I can review it with other devices. And it keeps me, provides absolute transparency. I take no trades. I have commitment to take no trades off stream. So it's ultimately transparent and accountable, right? That's the reason for it. Now, the TLab is a bookmap Discord chat room. As you can tell, I'm typing here. It's a bookmap Discord chat room called the Traders Lab. It's started by a guy named Tom B., who is the only place I would recommend someone go on the internet for thoughts about trading or any kind of instruction. The key things are the following. It's absolutely free. You don't even have to be a subscriber to Bookmap. Now, you do have to join the Bookmap Discord server. So that's normal, right? In order to be there, in order to join the chat room. There's no pressure from anybody to join, to subscribe to Bookmap or anything else. There is absolutely no pressure from Tom. There's nothing for sale. He's not trying to get you to go to his website or buy his indicator or any of that bullshit that you hear. I don't know about anybody else, but I'm so sick of all that crap. And the majority of these influencers or people that are doing that, they're trying to sell something because they can't make any money trading. That's my opinion. So and then on top of all that, he is a very successful professional trader, 45 years in the business. Started out as a money manager, Series 7, all that stuff. And he's been trading his own account very successfully for years. He understands trading as a business and what is required there, not a video game or gunslinging or anything else. And he freely shares his thoughts and his time. He streams every day from 10:30 to 12 on YouTube and in the Discord. There's 60 or something PDFs there and available for free that you can download. They're structured trades with annotation and a bunch of stuff. So that's the Traders Lab, and I make a couple of posts there every day. First, that chart that shows all the levels and provides a little help for folks who don't have IRT, for example. And earlier, about 6:30, I post upcoming reports and numbers for the day. I'm in no way affiliated with it. I just, I'm just a member, or, I'm just whatever you call a person who goes to a Discord chat room. That's all I am, just like anybody else. There are a few moderators, which I'm not. And then, of course, Tom. So let's see now. We're approaching the open here at 8:30. And when that happens, I will switch my IRT charts to the RTH session, and I will start to track the the 2 minutes is going to be about 8:33, I guess. I will start to track the VPOCs by entering my flags, which if I get on the right screen, you'll see how I do that. So let's go. Here we go. We've traded way up. One would expect with that big pop off the number and all this long that there would be some responsive selling at the open. or I would expect that. I would expect some profit taking, which would constitute responsive selling. Now, the mid has stayed pretty much where it is. The VPOC is where it is. I haven't got the rest of the levels in there yet because I've been busy talking. Let's see. Well, I would guess that the overnight high is going to go pretty quickly, and it's got about a tick away. So I would say that statistic is probably going to be hammered. We have now traded up to and over a previous micro composite VPOC, and you'll see that right here. What I do is change the text from red to black to signify it's a previous one. And there's our open. You see that our VWAP migrated, mid migrated, and the POC. Now, I can't throw the flag in there yet because they're all sitting right on top of each other. But in a second, that'll pull back, and I'll put a flag in there, and that goes like this. MCVPOC. There you are. And the reason I do this is because the yellow line continues to draw for the POC, but as the day progresses, it'll scroll off to the left. So I can easily see if we're revisiting a previous POC or not, POC level or not. And everybody's real excited. So much for my we're going to take profit here. Now I need to get this scale wound out because you see how far off that can get. There you go. At the initial stages of the market, the POCs are very volatile because there is so little volume. Here is 1300. The minute this says 1300, POC is going to migrate up there or not. Got real close, got within 1310, 1450. So got within, 20 of migrating, did not. And now they're back down here and they built this up to 1450. So when one of these gets to 1451, POC is going to migrate up there. Remember the definition. It's the price at which the most contracts have traded so far in the session, period. Now we have the mid, which is the middle, duh, and the volume weighted average price, which is also indicated by this, whatever color that is, magenta or something. So much for my idea of responsive selling. Opening swing high, a little bit of a swing low. Here we go with the VPOC migration. So are we going to have an opening drive here? Maybe. And now I'll go to IRT and I'll show you how that works. It's really complicated. This is how complicated changing those is. There you go. Those are, I also track the micro, E-mini, everything else being equal. Just out of curiosity. So you see what happened here? Huge gap up again. And then I will put in my gap lows and highs and all that stuff as the day progresses. But right now I'm busy looking at this thing, so I'm not typing all that crap in here yet. So we have a big gap up once again. And there's a little of that responsive selling that I was looking forward to. Here's our IB high and our IB low. Remember, they are just the high and low of the first 1 hour of the regular trading session. That's why they are where they are. This one, well, there you go, migrated lower. And in about 30 seconds, as I explained some time ago, the flag will update because of the refresh time available in Bookmap for the Cloud Notes column as compared to the indicator. Everything is working exactly as expected. It's just nothing I can do. If they had this, if the Cloud Note column had a faster refresh time than 1 minute, then I could have them set the same. And up we go and down we go. So remember that the VPOC is very volatile in the beginning because it's only an indicator of volume of the price at which the most volume has traded. So right now we're at 23 something probably, because this is 22.97. So the minute one of these other prices is 23.01 or whatever it is, that's where volume profile is going to go. Simple. I mean, the POC is going to go. Simple. What now? We are in a gap situation, and so there is an old adage from the market profile days, Jim Dalton and those fellows, called gap rules. And what that says is, if price closes the gap early on in the session and is accepted within previous day's value, there's a very high probability, I do not have the statistic, don't quote me or whatever, that price will trade all the way across that value, the previous day's value area, to the other side of it. So if they close the gap early in the session, if price is accepted in previous value, chances are good that price will trade across that value of that previous value. That's the old-fashioned market profile gap rules. We also have a situation which could be gap and go, right? And that's, if you wonder about the gap, here's yesterday, here's today on the market profile chart. And again, here's yesterday. Here's yesterday and here's today on the micro composite. Here's yesterday, here's today on the Renko. And same story for this is NASDAQ and this is the ES. All right. Now, so one other thing that's important in case you trade or initiate with a keyboard, as do I, rather than a mouse. If you're poking around on other monitors or somewhere, you need to make sure that the Bookmap application has the focus, because if it does not, you'll keyboard up a storm and nothing will happen. Needless to say, I've experienced the joy of that before. Well, what we have right now is an 8-point range, only because of this pullback down here to this liquidity level. If you discount that, our range is about 5 points. So, keep your powder dry, I guess is the best way to put that. And this bracketing algo bullshit, I'm so tired of that, but I talk about it every week and every day. It is what it is. It starts at about 5 or 10 minutes to 7, and these guys will keep this tracking all day long. And it you just have to look past it and look at the real volume. That is the heat map. These lines here reflect all they do is graphically reflect the levels in the book or the resting levels, resting liquidity. That's what the purpose of it is. And these, the purpose of these algos I've talked about before. They're just annoying. That's all you can say. So here we are. Now, if I didn't have this statistic here, I would throw another flag there. But I do, so I won't. You notice now that the muted yellow, which is the volume profile, volume point of control for the full session, is now aligned with the volume POC for this current RTH session, which is typical. And we've taken out that MCVPOC. We haven't taken it out because typically we don't consider levels taken out in the ETH period. So what we've done here is gapped over this. And no, we actually did just trade into it here, but that doesn't seem very right. What is this, 5505? Is that what I've got here? Oh no, 5530. The hell is that? I think I have that in the wrong spot. It's 55. That previous MCVPOC. Oh, this is from a long time ago. I tried to put the dates on them, but I did not get it right. That's, what are you looking at? That is this MCVPOC, which is not in the right location. So I'm going to take that off to avoid confusion on my part or anybody else's. Okay. So yeah, tight consolidation up here on a big gap up. And that's where we are. That's where it stands at the moment. And we're 10 minutes in the market. Again, there is a number out at 8:15, which is already done. The next one is business inventories. That all the rest of the numbers are only 2-star. 9 o'clock and then 11 and then 12:10. So here we are. If they start making lower ground through all this vacuum, like look like they're going to try to do here, these would be potential. We test up to this IB low and don't get above it, really. The open volume point of control, micro composite volume point of control is 5505. Let's see if I have that on here properly. No, I do not, so I didn't move it. That is from the previous or 2 back micro composites. Let's throw that over here. Change our color to black. This means a naked volume point of control previous one, okay? That's my thinking here, anyway. Now, any of these little waffles around here would be good. We must remember that there's only, well, now we're getting to about 12 or 13 handles wide on our range. Still pretty tight. Still pretty tight. They keep gapping over these MCVPOCs. There's another one down there. It's 5367 that was traded, gapped up over it too. I don't know what the hell that means, but that's what I'm saying. So what do we got so far? We've got a day that is gapped way up. They don't seem to be too excited about closing that gap. And they're trading it in a pretty tight range off number. A bunch of numbers, but not a lot of impact of them. I mean, it gave us the gap, I guess you could say that. But yeah, this thing here is just annoying. turn that back a little bit, I guess. Okay. So here we are bobbing along. I don't know what they're talking about over there in the TLab, but something. They're talking about something. It's this level here that I think this is Rod is talking. There's a couple of people there who 55.32 half. That is a previous MCVPOC, but it has been taken out. It's not naked, so by that definition, I take them off my chart. I can see them, of course. That's this one here, right? So there's 35 half, and that's right where we're trading. But that was taken out by all of this MC here, and then we had this one down here. We had, come on, gap down, and then this micro composite, and now we're back up to this one. So as Tom likes to say, the market goes down to go up and goes up to go down. Pretty right about that. It's just, typically it is speculation. Several days so far this week, we have traded all over the damn place and ended up within a couple of handles of the open. Well, that's not a market that's got a change in market sentiment. That's a market that's being traded. They're trading the shit out of it. Right? It's just speculation. And I'm not saying there's something wrong with that, but I'm saying that it's not indicative of some sort of a change in sentiment or high time frame. All this market crash crap, and this stuff is just politically driven. News cycle. Can't think of the right word now, but BS mostly. Think about, go over here. We had this gap down, and this sell off. The market was, the economy was tanking. We were entering in a recession. This is the beginning of the crash. Oh, well, wait a minute. Excuse me. It's just sensationalism for the news cycle. And a lot of the people, 99% of the talking heads, all have a different agenda. I mean, they talk about the useless pukes on YouTube that are pumping and dumping, and I agree with them. They're useless pukes. But that's what the analysts are doing, the same damn thing. It's like what's good for the goose isn't good for the gander necessarily. And, you're not supposed to spoof. You're not supposed to manipulate the market. And they openly talk about doing it in interviews, the high time frame people and the hedge fund guys, So what the hell is there, yeah. Anyway, it's in my opinion, futures is probably the most level, transparent market. The worst being, in my opinion, crypto, followed in hot pursuit by FX, because there's no centralized exchange, there's no regulations, and I happen to know firsthand experience about the FX market and what a cluster bucket shop deal that is. I won't go into that description, but I got to be witness to the back end of a very big FX shop with that MetaTrader or whatever that program they all use is for Forex. And when we lived in Kuala Lumpur for 11 years, I did live over there. We just moved over here for our daughter to go to high school 3 years ago. So I watched what they can do, and it would blow your mind. I don't think that kind of thing, that capability for back office manipulation exists in the futures, because it's a regulated exchange and it's a centralized exchange, so you can't do that. Both crypto and FX are neither. The worst being crypto, because it's blockchain, complete anonymous. Let's buy lots of drugs and do everything possible illegal and have a great way to pay for it. All oligarchs contributing heavily to political campaigns. What do you suppose those people want? Do you suppose they're doing that out of the kindness of their heart, or because they're going to expect something? I have no use for it myself. And I could have bought, I'm old enough. I remember distinctly when Bitcoin and all that crap started. I could have bought it for, $5 or whatever. It's now $64,000 a coin, so it would have been great. But it's like a Ponzi scheme. It has no value intrinsically. It's not based on anything except the possibility of rareness, which is supposedly controlled by the algorithm not to let more than, I forget what the number is, ever generated. So it's only worth what somebody else will pay you for. And the people who bought it before selling it to the people now, and they're selling to people who will buy it in the future. Well, that's a Ponzi scheme. So there you go. Let the buyer beware, I guess. Caveat emptor. Caveat emptor, I think is the word in Latin or Greek. Let the buyer beware. So, no desire to extend the range, no desire to close the gap. And why? Now, this little dipsy doodle here, you'll notice, is the muted yellow, and this one is the bright yellow. So this is the full session bouncing around from here to here, but the RTH session is remaining constant here. And what the hell are they waiting for? Well, we do have news at 9, retail inventories, but it's only a stage. I mean, it's only a 2-star, and business inventories. It looks like they're waiting for a number. Except that the book is not, going dark. The liquidity is holding pretty much normally. So maybe they're just, somebody's refilling the Coke pipe. I don't know. Who knows? What you need to do is narrate if this, then that, if not, then what, and try to anticipate what may happen. And in a minute, I will get into the trading as a business, which is probably the most important idea that I want to share. That's 57, I guess, huh? So trading as a business, as opposed to a video game or gunslinging, is the following. It is a business of statistics and probabilities, not seat of the pants, emotional slinging. And what do I mean by that? Well, first thing you have to realize is that the outcome of every trade is the next trade is 50-50. And that's absolutely correct. Statistics. I don't care if you've had 9,000 wins in a row, the outcome of the next trade is 50-50. That's not more prevalent to have one or the other. Okay. And that the market is completely random. Meaning, and it's completely random because of that fact that the outcome of the next trade is 50-50. So you don't want to put yourself in a psychologically depressing hole of trying to predict where something's going. You can anticipate it based on, okay, we've got this level up here, we're going to test, we got that kind of a various different statistics, etc. Which brings me to the point of trading being a business of statistics. What you must do, in my opinion, and that opinion of a lot of many more successful people, and I am Jim Simmons, Renaissance Technologies, Dalio, Mark Douglas, all those kind of people, Tom in the TLab, and many others, that you pick out a setup which looks to have potential. You identify the criteria for that setup specifically. And then you capture a significant sub-data set of that setup with that specific criteria. And that needs to be about 50 samples. Once you've done that, you can mathematically calculate whether that setup and that criteria has a statistical edge or expectancy, probability, whatever word you want to use, or not. If it does, your mission as a trader is to take every instance of that setup and criteria that present themselves in the market. And you rely on the law of large numbers to manifest the edge to your bank account. If it sounds familiar, that is the business model for the gaming industry from the point of view of a casino. They play absolutely no games for which they have not identified a statistical edge. They have a very, very specific set of rules to play those games. And their mission is to trade as many, deal as many hands of 21 as they can. If a gambler wins, it's a cost of doing business. They don't rush over and change all the rules. They don't shoot the dealer. They just deal the next hand. And it should be pretty clear to anybody that's ever been to a casino town how effective that business model is. And it applies in other areas too, but the casino thing is probably the most widely known and the most clearly identifiable as successful. So trading is just that. And the way to capture those 50 samples, I mean, you could trade every one of them, but to think about how many trading days would have to happen for 50 setups to occur with an identical parameters. And you could be 2 years, I think. So the best way to go is to try to backtest that and get those samples. And then when you know you have that edge, to take every example of it. The second, of course, the more basic responsibility or job of any trader is to manage risk and be able to trade tomorrow. You can do all the scientific statistical analysis you want to do, but if you blow up your account today, what the hell difference does it make? You're out of the business, right? Which then loops around to controlling emotions, FOMO, and all those things. And that's where approaching it as a business of statistics is a big help, because first of all, when you've properly identified a trade setup and parameters that have a statistical edge, which you have identified and verified mathematically, you know when that setup is getting ready to happen. You anticipate it. You can see it. You're stocking it. It's not a surprise. You don't have to hurry up and, oh, click, shit. No, you know when that's going to happen, and you're waiting for it, and you're stocking it. And when it presents itself, you enter the trade. And then you have no negative emotions about predicting, is it going up, predicting, is it going down. It's just the next sample of your data set, and it will be a winner or a loser because the probability of the next trade is 50-50. But you have the confidence of knowing that based on the law of large numbers and the math you did, identifying the trade with a positive edge, that edge will manifest to your account. That is professional trading as a business. That's the holy grail, actually, for trading. And you have to do the work. You have to identify the setup, the parameters, the trigger. You can't vary them. One trade can't have a 10-tick stop, the next one have a 5-tick stop, the next one have a 20-tick stop. You can't do any of that. They've got to be the same in order to be apples compared to apples, so that you can identify and mathematically determine whether there is an edge or not. I mean, if you want to delude yourself and do all that other stuff, fine, but then you're just gambling. So the idea is you got to do the homework first, identify one setup and verify, vet it, and then take it. And then you can move on to the next one. That is trading as a business. And the work comes in. The real work of trading is the vetting and the identifying of the setup and determining the positive edge. The trading itself is almost mechanical because you see that setup, you see the parameters, and when they line up, you execute. And you have your risk parameters already set in with your stops and all those things. There you go. That's how it is. That's how the business of trading really works. And that's why algos and algorithmic trading can be so successful, because that follows specifically that model. A human figures out the setup and determines the edge by doing the back testing. And at that point, it can almost be automated if you're a good enough coder to specifically identify all of those parameters that are required. And then the edge manifests itself. That is trading. That's the holy grail of trading. And it's not just me saying that. It's not something I dreamed up. Goes back. Mark Douglas was teaching trading stuff and psychological stuff about trading back in the 70s and 80s, I think, or 80s at least, 90s. He's been dead for quite a few years. He's talking about the same thing. Richard Simmons or Jim Simmons at Renaissance Technology, most successful hedge fund guy in the world. Now just recently passed away. But it was a mathematician and realized that it was all a statistical business. Hired mathematicians and statisticians, and that's how they developed Renaissance. Made some phenomenal 60 or 70% returns a year for 30 some years. It's just, crazy. Absolutely not. In no way, shape, or form discretionary. Talks about a couple of interviews with him are pretty cool. Talks about how they had these, models and plans, but they didn't follow them. They tried discretionary trading at first, and it was a disaster. And then realized that they couldn't do that, and it was pretty interesting stuff. Now here we are so far today. We've extended the IB low. We've extended the IB higher. We are in the second 30 minutes, and we have a near perfect mean reversion or balanced profile at this point. And we only have a range of about 15 points. Pretty tight. No. Now, maybe that mean reversion from the IB high, now that's almost 10 points. There is 10 points. And actually, this would have been a valid entry. Remember that the IB is not set yet. It won't be until 9:30. But this is a mean reversion, right? And I was just talking about it's outside in. And that was pretty much perfect with no heat and 10 points. Plus, it's still going. That would have been a lovely short. I'm busy talking and pointing stuff out. Stupid. That's something I have to figure out, is a balance of narration so that I hear what I'm thinking and focus on trading. And I think I have a meeting. Hope it's at 10 and not 9 in my other world. Let me just look now that I said that. God damn it. Here we go all the way across the IB. I'll talk about an IB trade in a minute. Where did you go, Mr. Mouse? There we go. Meetings. Great. 10 o'clock. Okay, super. Yeah, that's what I thought. All right. Well, now what are we doing? Oops, wrong mouse again. God damn it. 209. So a word here now about mean reversion and asymmetrical trades, which is important to get your head around. The majority of the time, the market is rotating or mean reverting like this, okay? Outside in. And so far today, it's been real measured and tradable. I haven't done that because I've not been focused right. For example, up here, down here, there, down, back up. Okay. A thing about asymmetrical trades is that what that means is if you enter a trade short here, which is in line with the mean reversion idea, you can have a 1 tick or 2 tick stop, 3 tick stop, 1 point stop, and you have 1 point stop and 5 or 6 points, nearly 10 points, 8 points, potential profit target to the mean, and maybe can go on like this one. So that's asymmetrical. There's an asymmetrical relationship between your risk and your reward. And that fits well with mean reversion, which is the majority of trading that exists in the market. The majority of days we rotate or mean revert. compared to the majority, the small minority of days which trend. So those are skills to develop and to pay attention to and to fit into your when I'm thinking about vetting setups, there is a right in line with that, and in line with where we are today, this moment. We are at the IB in an IB 30 configuration, and I'll tell you what that is when I get through typing this stupid thing. Okay. The IB, as I've mentioned before, is the high and low of the first 30 minutes. So that means these move up and move down for the first 1 hour of trade in the regular trading session. All right. There's an old statistic that says after 9:30, a huge percentage of the time, 98.something%, in the regular trading session, price will exceed either the low or the high in the remainder of the RTH period. Could be the first second, could be the last second, but it will. A fellow in the TLab named Rod, who's a good coder and statistics guy, came up with the idea that and vetted that the high or low of the first 30 minutes has a high probability of being extended in the second 30 minutes of the period. In other words, right here, we set the IB high. I think so, or here. And in the second 30 minutes, one or both of them will be extended. We just had the IB low was right here. It was just extended down here. And that's a very high probability. Does it move enough to pay? Sometimes not, but that is so in the TLab, if you go there, and I would suggest you do, I do. I monitor it off to my left on another machine and monitor. That's called the IB30 stat. And the original old-fashioned IB stat is the IB60. Now, we have pushed this down, but the thing with these stats, as with anything, you got to be careful. Okay, it's a very narrow range, and when you get up here, very short distance to the VWAP, the POC, and the mid. Well, think of all the stops that are living right there, where all that fuel is. How tempting that is to a higher time frame trader to get up there and take that fuel and then move one direction or the other. So all these things have to be taken in context, and there's got to be room to get where you're going. And of course, in my case, with my trade plan, there's that 3-point risk criteria that says I can't take an entry. Here I could enter short, targeting the IB low because it is just 3 points. Well, three and a bit. Okay, there's 59 or 39 or 29. Up here, 30, and down there's 6. So it's just 4 points. If I wanted to target this IB low, I could just do that and have a valid entry with the 3-point range requirement. But you see what happens. Now they're going to trade it back up and have a look for that fuel, in my opinion. So these are things you need to think about, and I need to think about when I'm vetting these trades. Now watch what happens when they get up here. There's going to be a bunch of stops up here, I'm assuming, and pop goes the weasel up to get some of these targets, to get some of this fuel out of the market. Not a lot, surprisingly. Typically, retail traders hide their stops on the other side of those levels. They typically sell the VWAP when they come up to it from below and buy the VWAP when they approach it from the top. Notice how we popped up here to this previous VPOC, and now we're back down here again. Amazing how those flags work, huh? And how often we go back to check previous locations. So now there's no way I could enter a trade in this area. First of all, I would not diddle in the middle, which is, by definition, this is the most highly traded price. So why would you enter there? One way or the other, the chances are the probabilities of being taken out or exceeding your 3-point stop are real big right here. But I couldn't do it anyway because it's 54. It's 34, 32. That's only 2 points. 32 to 30. That's only 2 points. 30 to 29. Point. 29 to 26. So once we get down here, I could have a valid entry for the IB low. But you see, we're taking out those stops up above and we're getting up towards the developing value area high, which is only 2.5 points above the VPOC. So that doesn't qualify either. Now, that's how all those things are, they're not independent, they are dynamic and interdependent. So, and I have to keep my wits about me here and realize I have a meeting at the top of the hour. As much as I would like to have taken a trade, nothing has set up for me, except we are doing, what was this? Mean reversion. What was this? Mean reversion. So we've had, a full sweep, mean reversion back up. Now what are we going to do? Hear all kinds of noise over here. I don't know what that means. So that's it. Mean reversion is jokingly referred to in the TLab as mean because you're essentially picking the outside edge. Well, where the hell is that? So far, this is the outside edge. It's identified, and it's identified on the volume profile. But, you've got is this an outside edge? But it's not enough range. This is truly the outside edge. So this is not any kind of a structured trade or a trigger or a vetted anything. That's just a run down to the IB low and then haul ass for the top. That's not anything that I could consider a structured setup. Let's look over here. What happens here? So over here, we have 110 stops out. We have a bit of an iceberg. We have a little pull up that doesn't seem to, okay. So there's 98 and then 2 and 10, and then the sellers kick in. So if you called that a trigger and got on this as the outside edge, where are you? You're at 43. So your stop's going to be 46. Your stop's going to be up here, 3 points above the outside. And it was a beautiful trade if you got on that. I find it hard to do that. And perhaps because I'm wound in too tight to see those exhaustion periods happen. 102, 10, 1. Yeah. One of the things that I have found being focusing on being proactive, not reactive, which is basically how you can be if you approach trading as a business that I described. You are anticipating where you're going to get, not reacting to where you are, where the price is. Forgot what I was going to say. I was watching price there. it's so good for you psychologically because you are anticipating the move. It's a structured, vetted trade, so you have an edge that you're aware of. It's mathematically identified. And when you use the risk neutral trade plan, when you get that first risk neutral scale off, it is an unbelievable change in psychology. Right. So all of those things add up to the fact that you are not letting, you never get rid of the feelings, the emotions, the chemical releases in your brain of FOMO and fear and all that stuff. You ever get rid of that, but you have to recognize that they exist and what they are and not act on them. And that's much more easily done when you are only taking statistically verified edges, trades, and have the risk neutral system in place. Guardrails, right? And of course, your mileage may vary, but that's how it works. That's what I think. Those things, and so many traders. I think the majority of the traders that crap out, the 94% or whatever, the retail traders that fail, is because they don't have any kind of a business plan or structure in mind, or trade plan, or are aware of FOMO and all that stuff. None of those things exist for them. It's like a video game, or it's like they're playing, I don't know, whatever those games are that my daughter plays till the wee hours of that, whatever they are. Call of Duty. I mean, that's one. She doesn't do those first shooter things, but, any of that crap, that's what they are. And that's the way a lot of people approach this, I think. And I think those are the 94% of the people that wash out. And the successful other 6% are the people that have figured out that it's a business and are aware of their emotions. And that's my opinion. Anyway. That is my opinion. Oh, toop, boop, boop. And we're still in a tight range of mean reversion. I'm sure I haven't read over here for a long time, but the TLab. But yeah, I'm sure that it's a mean reversion business so far today. I mean, it's pretty obvious. Oh, I'm doing the wrong. It's pretty obviously a mean reversion, and I don't know how long ago I switched off of the book map. Sorry. It's on a monitor just out of my peripheral vision, and I don't really see it. My trade rig primary monitors are in front of me on a 4-monitor rack, and that OBS and stuff is off on another vertical monitor to my left for that same machine. So I'm trying to focus on the market and not be a presenter. I guess. Now, tempting here. Again, thou shalt not diddle in the middle. Pretty sure it's in the Bible somewhere. It ought to be if it's not. That's just so many things that I think contribute to traders crapping out. And another thing that is worth mentioning here for me. Put this stupid timestamp in 27 is I have error codes in my journals, both my journalytics from Jigsaw and also the internal or the local journal, which I have there. I keep, stats and data every place. I try to anyway. I have error codes, and for me, breakout is an error, and that is because I find that when I'm looking for a trade like that, like, oh, okay, we're going to get up here, that's a FOMO, right? And I'm not being disciplined enough to say, okay, I'm not going to trade off of this VWAP or VPOC. Now, if we test up through here, come back down, got some buyers here off of this, that's something that I have to identify as a proper trigger. But a breakout trade is, in my opinion, a FOMO for me. Because, oh God, I want to get on this up here to the IB high, and which is what I'm feeling right now, and that's why I'm talking about it. I don't have my head around how I deal with this. I don't want to trade off the POC. Yet we tested down, we tested through the developing value area high, we tested back down through it. Where do you get on it? Down here, this buying up here, or another test down? I don't know. And we're going to approach the IB statistic in 4 minutes. So it's just, that's personal. And and I realize that breakout is a very valid strategy. I mean, the turtles, for Christ's sake, Richard Dennison and his turtles, they made a couple $3 million in a year or two or something like that, only trading breakout strategy. And let's just watch this. So what could I have done? Taken this failure to get through the VPOC, and where would be a trigger? I don't know. I don't know. Here, maybe? Or here? So 53 or 39 to 44. So that's just 5 points to the IB high. And let's imagine that I took that trade, and I'll just keep the mouse right there at that level, which is this little micro structure here. And I would assume that we're going to get up there. I anticipate that we are going to go up to that IB high because we are 2 minutes from the IB setting. It's a very high statistic, and now the screen jumped down, so I could draw a line here, I guess, but won't. So we're at 39 and there's 42. So we just scaled barely. And want to get over that 42.5 in order to really, that would have been a scale right there. So we would at this point then be scaled in risk neutral from our 39.5. And now our butt's starting to pucker because it's pulling down to but the second you're scaled, the worst thing you can do is scratch, right? So it's just a pure pleasure. And I still believe that the trade will go on to take out that IB high. Now, however, jumping on this, targeting that IB high is definitely a breakout because you're only 2 points away. There's a lot of liquidity up there. Yes, it might break through the IB high and run up a bit, but not yet. So there's the IB 30 once again, because we're still inside the second half hour, we've just extended the IB high a teensy weensy bit. So that's the IB 30. And now, what do you start thinking about? Well, I wouldn't want to think about a mean reversion at this point because that stat still exists in 30 seconds or 15. Doesn't mean jack, but that's my thinking. And having said that, if this we got out here, we got no place here, and you took this trade, you're at 42, at 44, 41, you just scaled again. But I'm thinking that we're going to take out that. Now we're in the IB 30, and now we're in the real IB, and this will be the IB stat once they take that IB high. So we would have, it would have been a valid trade. Our hypothetical entry here, wherever it was, here at 39.5, scaled, 44. But that's just scale and a bit. That isn't a target or, and in this case, there's no real targets above us here, is there? Let's see what we got. Nothing for a hell of a long ways. That's a naked volume point of control up at 610. It's another 50 points, 60 points. That's probably not real good idea there. Essentially, what we've done is tested and extended that IB low by a tick, and then we've just gradually taken the stairs up to this high. So we've mean reverted once again. Down, up, down, mean reversion, and up. If you were playing those swings with asymmetrical entries, what are you up? 30 points or something. That's a pretty good day. Pretty good morning. Pretty good hours work. Had a lot of people in not a lot, several people in the TLab now trading the NQ, which I used to trade. Malaysia. It's a very different animal. I believe in focusing on one instrument at a time. Maybe it's just because I'm old-fashioned or whatever else it is, but I believe that you need to in alignment with my trading as a business, statistically driven business of probabilities. I believe that you need to do that, and that you need to focus on one instrument and vet one setup at a time. If you can vet, if you're a good coder and you got yourself a system all set up and you can quickly backtest and come up with this statistic on different setups for different instruments, I guess why not? But from my point of view, just, maintaining focus on one. You notice it on Bookmap. I only have one instrument. I used to have three. I had the Micro E-mini, and I used to have the NQ. A couple things have happened. I have this problem with which reminds me, I don't have a turn back on here. There's a problem with the absorption indicator, which is recognized by Bookmap support, that it chokes the system completely, especially in fast-moving system. This down here will suddenly turn red. There'll start being a bunch of red bars. You see that yellow ones we're recalculating? That'll fill up with tall red bars, and then you'll start getting brown vertical lines and a red error message that absorption or consolidate data aggregation is taking place, and then I have to quickly turn that off. It's a nice indicator to have. Right here is 123 stops were absorbed by buyers at that level. That's what a little green guy this means. We still haven't taken out that IB high. Ticked right up to it a time or two. So, yeah, here we sit. So, this gap crap is getting difficult to, not difficult, we have 2 days in a micro composite and then gap out of it again. Now, so here's the outside edge. Are we going to continue to fail up here and rotate back down? Or all these guys that are, trying to pick the top, well, there you go. There we broke the IB. Stat is in place, but I am pretty shocked. Here we go. That there's not a whole bunch of stops above here from all these people along here that were calling, picking the top, looking for a low, shorten and putting their stops above here. So we got 170 out there. Now we've basically had an exhaustion up here at 10, but on a situation like this, you can't really call that because it could just keep putting up, right? Here's, as it's done here, 12, 4, or 5, it just keeps putting up till you're stopped out. That's not quite the run that I was thinking would happen on the IB stat, but that means the statistic has been satisfied. So that 98% has been validated. And now what will we do? Will we be in a situation of the IBC, which is IB continuation, or will we have the IBF, which is the IB failure? And the IB failure is basically a mean reversion trade and is only really valid to expect or to anticipate in a mean reversion or rotational day, which incidentally we've been having. So in other words, we've been mean reverting, right? Rotational. So IB continuation would mean this. IB failure would mean this, back to the mean. In the case of the NQ, you would think about an IB continuation because it's the context of the day is essentially up. It hasn't really been mean reversion, mean reversion day on the NQ. So likely we would have the IB failure. Unfortunately, the time to get on that was up in here someplace, but I don't find that valid because how do you do that? How is that even, how do you even vet that possibility when the IB has just been set here? Don't know. And now here could have been a good moment that I wasn't focused on. We pulled down, we pulled back up 57 out, and then down here. Now we've only got 15 icebergs. Will that set up a IB failure? The problem, one problem with an entry here, and why I'm not going to do that, is 44 and there's 47, right? Where's your stop? Right in the middle, below the swing high and right in the middle of traffic. A great place to get stopped out. And So I'll put that little flag right over there. And I suppose this sounds pretty contradictory, and it is to me too. One of the problems is revert back to trading as a business, minute 57 in. I don't have a vetted trade here with specific entry and trigger to take automatically when it presents itself. So that's why I am still basically in the discretionary mode. And I traded that way for a long time and had success, but I don't believe I believe that trading as a statistical business is the real holy grail and the real proper method for that next level of success in trading, where it is a consistently profitable, self-supporting, we go live wherever and I have no problem supporting the family or teaching the kids to trade, that kind of thing, right? As opposed to just, I'm up 5, I'm down 10, I'm up, 20, whatever it is, that kind of flipping around thing. And let's just see. If I had taken this stop here or this trigger, we'd be just, you'd be clenching your butt because you were just looking at a stop. And it's consolidating up here, which is not a rosy picture for either mean reversion or IB failure. It's tending to be more of an IB continuation setup now. We've traded down. We didn't get anywhere. We had exhaustion. We've traded up here. We got 129 out, 11. Now we only got 2. Sellers didn't get anywhere here. Are the sellers going to get somewhere here? And we have an IB continuation trade. This is inquiring minds want to know. Huh? I think it's just kind of waffling around, and I don't have the confidence in this setup or in the action of the day into that trade. And I don't really see anybody talking about it on the TLab. I wish Tom would weigh in. That would be interesting to see his thoughts. Haven't gotten really any conviction as to why we should not be mean reverting again. And I don't know what the hell I keep feeling like the market's waiting for something, They may be just waiting because it's Thursday and they're tired of all the alderall that they've had. I don't know, but so 9 o'clock was it, and that's come and gone. Nothing until 11, but that's the Atlanta Fed, and 12:10 is the FOMC. Harker speaks. Only a 2-star, but lately those Fed guys, Jerome Powell farts and the market drops, or I forget somebody, we were laughing about it. He walked up to the podium and put down his notes and the market jumped like 15 or 20 points. I mean, it's just like, okay, now how the hell does that work? I'll never forget, because I've been doing this for a long time. I started in about 99, back when Alan Greenspan was the Fed chair. This was before lots of streaming and all that, any of these YouTubes and stuff were in place. And the reporters used to gauge his testimony before Congress. They would gauge the sentiment of him by the thickness of his briefcase. Think about that for a second. The Stone Age, right? So it looks like that IB continuation may be going to happen. And this is where I have to be really aware of the breakout FOMO. Okay. This test, well, there was iceberg of 4 was canceled. We only had 3 sellers stop here and nothing happened below that. 116. Are they going to test back down to the IB high and then perhaps put on an IB continuation trade? Don't know. I'm hesitant to do that because of the structure so far today, which has been just a tight range and mean reversion. And I'm wondering, why would that change? And that's on a gap to new highs. I mean, not new highs, but, a gap up and not even a glimmer of a lot to close that gap. And it looks like we're going to go IBC here. And I'm guessing that stop would have been right here. So, that this would have been the entry. And that's 4. And that's 1. So the stop would have been below these swings. So that's a reasonable idea. Yeah. And this is where that breakout FOMO starts to, you start to get, well, are we going to take a pop here? And because, again, all these everybody at the top, there's always a bunch of retail guys are trying to pick the top. So there's a bunch of fuel up there. And there's the conventional wisdom says that every time you test these highs, it's like beating on the bottom of a bucket. Pretty soon you knock a hole in it and up you go. Or down you go, either way. Was this the entry at 46? No. Levels at 47. I guess you could say that these exhaustions or these tests down and got no place would have been a trigger, and then buyer stepped in, but that's only 2 points so far, and that's basically 2 points to the. There we go. And now they got over that the previous high, and they'll probably catch a bunch of stops and run it. So I will be disappointed that I wasn't long from down here, but not convinced that we were going to do an IBC in this mean reverting environment. And what do we get here now? Well, we get absorption of 181 contracts. We had 153 for 3 on an iceberg. 2, 39, another 129 absorbing. Doesn't look like they're getting too far. 200, whatever that is. 74 absorbing, and we're still going up. These are sellers absorbing buyers, trying to hold it down. And 653 buy stops taken out, which means 653 short guys had their stops hit. Guys who had gone short and had their stops living up there above this liquidity area here. I guess this is real because this is algo moron. And that seems like a exhaustion, and they're trading it back down towards the IB. And it looks like some TLab fellas took that IB consolidation and took that pop. So they got 45 to 51. They got 6 points out of that. Good for them. Now, with my setup, my risk neutral setup, and here we are right back down to the IB high. With my risk neutral setup, that would have been a scale, and certainly not to the runner, right? So I have to trade manage aggressively, assuming that I got long. Well, let's say, assumingly I got long here. Where'd it go? Assumingly I got long here. That's 44. Okay, 47. Right here is the scale. Now I got to manage right up below that quickly because of this violent maneuver here. I would be I could still be sitting on my scratch, or I could be trying to capture this amount of ticks for the scale. Wouldn't catch any of this because it doesn't make any sense to try to, pull up, trail up past the swing low, which is right here. So now it's not stopped out yet. If I were sitting on a scratch, had I trailed up, stopped out for, a couple of points. No significant money. And one of the things that's you also need to be aware of, the risk reward ratio, and like I was talking about, asymmetrical trades is really important because you find yourself in a on a treadmill of, if you have a 1-to-1 ratio, for example, if you take one stop, that means you got to have two winners to have made up for the loser and be one ahead. So a multiple risk reward of 3-to-1, 4-to-1, if you get one target, then you're ahead 4. And if you take 1 or 2 stops, you're still ahead 2. So that's something to think about. And it's something that I definitely have to think about. It's very important. And that's got nothing to do with this win rate and all these, stats that people blabber about, because they may or may not be valid. I mean, sure, if you have a high win rate and a high risk reward, oh, you're really doing well. But, I have 100% win rate. Well, that means that maybe you take 1 point or 1 tick. It's positive. It's a win rate, but it's meaningless, if you know what I mean. Yeah. Now the IBC is still, if you had not trailed up, which I Probably. Another thing that happens if you have a high risk reward, and so you're not instantly in a hole, is the likelihood, or if you make this a rule of your trade plan, the likelihood, or it's a rule, that you don't move your stop from scratch. In other words, you don't trail up to manage. If you trailed up to the swing low, you're stopped out. If you didn't, and you have your stop below your entry down here, which would now be a scratch because you've taken a scale, you're not stopped out yet, but it is not very rosy looking right over here. You're not stopped out yet, but you're sweating bullets at this point. And that doesn't look too good there, right? So that's, are we going to enter now an IB failure and mean revert back to the VPOC? That would be the kind of the expected behavior of the day so far. Because we have been mean reverting. Boom, 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 boom. Not here. Boom, 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 boom. Now we break out back here. What would be the likelihood of extending this range up or mean reverting, given the context of the day? In my opinion, the likely context is mean reversion, meaning that as hard as it would have been to do, shorten up here at the high is a good idea. However, how do you do that? So you take 102 icebergs fill here, 272 buys are absorbed, 663 stops go out, and then you come up here. You don't have any more buyers up here. Whoa, where did it go? You have no more buyers up here, but you start getting these sellers in here. So is this a setup and a trigger for mean reversion? And that, as I said earlier, mean reversion means it's mean because you're picking the top, which is not a good thing to do, but that's what you're doing. It's outside in, right? And it's a hell of a long way to in. It could be a phenomenal trade. Here's the VPOC. So you're outside in, 15 points back to the mean. Now you've got the developing value area, IB, developing value area, I mid, VWAP, blah, 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 all this crap in the way. But that's what the mean reversion trade would look like. And is that something that's doable from here? And here we test down and don't get through the IB 6 or 7 different times. 2, okay, call me a liar for 2. We take, this would be a case of exhaustion. We take 328 stops out, test up, come back, we take out 8. And a buyer comes in. Well, so technically, that would be a setup and a trigger. Wait a minute here. Oh, hell, I got to get getting all excited about trading, and I forgot I got to get to this meeting. Oop. What? Ah, there we go. Okay. I didn't want to work there for a while, I guess. So we're, yeah, banging on these high like crazy. Lots of fuel up there. All these people figuring to get short, but I also, looking at the time, would suspect that we're after that big consolidation. There's a pretty good likelihood that they'll pull her back to start taking profit. There'll be a sell off down to at least a VPOC. But at this point, I got to think about something else coming up here in 15 minutes. I got a meeting with Alaska, so I'm going to try to join that on my phone so that I can continue in it when I go get my daughter, our daughter, from school, first day of school today. Here anyway. I don't know about the rest of the place. So let's see now. Yeah. I mean, in any of these little, in theory, 65, 68, there's 3 points, right? But you're betting on a breakout to the top for any kind of a runner. Now, the name of the game was back down here at this IBI test, 44. Now you got something to be proud of. Or this IB VPOC migration, which is, well, depending on how quick you were at this entry, you're stopped out right here. And up you go. So these pullbacks, how to figure these, I don't know. And I've talked about this a million times, which doesn't mean I figured anything more out, but, that's where I am with it. So I have to be mindful at the time. Not that I'm leaving, but I have to join this meeting at the bottom of the hour. Then I'll be leaving at 3 because I pick my daughter up. So if this all works and the meeting stays connected on my phone, that'll be pretty cool. I'm afraid that could be a hiccup when I leave the Wi-Fi to the data. We'll see. Yeah, well, here we are. Sure is some interesting action up here at the top. They just keep crowding it higher and higher and higher and higher. Whether that will pull off or not, I don't know, and no idea. Another gap up, however, so that's adds to the mix. So now we're getting this stuff down here. Whether that's because I just moved my zoom or whether I need to discombobulate this thing. Okay, I'm going to park up my headset here and get on the phone so I can join this meeting. Hopefully this plan works out.